Today in crypto. While Speaker Nancy Pelosi expects the infrastructure bill to pass, the Democrats are divided on whether to pass the legislation before the terms of a follow-up $3.5 trillion package is finalized. According to Reuters, Pelosi expressed confidence the legislation will pass upon announcing the date on Sunday, September 26, stating, "Let me just say that we're going to pass the bill this week." Earlier that same day she reportedly indicated she would not bring the bill to a vote unless she believed it would pass. Speaker of the U.S. House of Representatives Nancy Pelosi announced that the House will vote on whether to pass the Biden administration's controversial $1 trillion bipartisan infrastructure bill on Thursday, September 30. Pelosi noted the vote is slated to take place the day before the Surface Transportation Reauthorization Act of 2021 is set to expire. While the legislation passed through the Senate with bipartisan support on August 10, provisions contained in the bill mandating stringent counterparty reporting requirements for decentralized network validators and software developers who would not possess the information needed to comply. Although the bill passed on August 10, an amendment put forward by Senator Pat Toomey that saw bipartisan support from Senators Cynthia Lummis, Rob Portman, Mark Warner, Kyrsten Sinema and Ron Wyden sought to exempt validators, developers and node operators from the law. To the chagrin of the crypto community, the lone objection of Alabama Senator Richard Shelby stopped the amendment from being added to the legislation. Related, it's now or never. The U.S. has to prepare itself for digital currency. However, the infrastructure bill faces opposition from some lawmakers who believe it should be held back until negotiations have ended regarding the follow-up $3.5 trillion social welfare and climate bill. With the price of the second bill perturbing some Democrats, Pelosi indicated it is self-evident that the bill could be reduced in scope. "We are now working together with the Senate and the White House on changes to this historic legislation," she said. $3.5 trillion was the number that was sent to us by the Senate and by the President. Obviously, with negotiation, there has to be some changes in that, the sooner the better, so that we can build our consensus to go forward. Multi-million-dollar incentive programs and the ease of cross-chain transfers are boosting the value of L1 and L2-based tokens and raising the total value locked in their associated DeFi platforms. The competition among Layer 1, L1, smart contract platforms has been on the rise in the past couple of months as traders and developers continue to embrace Ethereum, ETH, network alternatives that offer faster transaction times and lower fees. According to a recent report from Delphi Digital, the price of Ether has remained relatively flat over the past month while competitors like Solana, SOL, and Phantom, FTM, have seen their prices rally more than 200% during the same time. One of the drivers of the rallies seen in Phantom, FTM, Avalanche, AVAX, and Terra, LUNA, is the fact that each has launched a variety of multi-million-dollar funding initiatives designed to attract developers, investors and new liquidity to their ecosystems. These initiatives sparked a flurry of new activity and cross-chain transfers from the Ethereum network to the Layer 1 projects, and to date, Solana has seen the biggest gains. When it comes to individual applications located on the different blockchains, the Avalanche-based Trader Joe DeFi protocol has seen the biggest gain in terms of TVL over the past 7 days as the value locked on the protocol has increased by 57%. Related, Finance Redefined, Layer 2 growth and the SEC's scrutiny, September 19 to 23. It's not just Ethereum's Layer 1 competitors that have seen an uptick in activity in the past few months. The launch of several new Layer 2 solutions and an airdrop by the decentralized derivatives exchange dYdX, have led to an increase in gas consumption by Layer 2 protocols. Data from Delphi Digital shows that the percentage of gas used by Layer 2 solutions is now above 1% after spiking as high as 2% in early September. dYdX protocol was one of the earlier adopters of Layer 2 technology thanks to a collaboration with Starkware, and the protocol has seen a new level of activity in recent weeks following the release of its dYdX governance token, which was airdropped on September 8 to users who had previously used the protocol. Since the airdrop release, The TVL locked on the dYdX has increased from $422 million to $554 million, and its 24-hour trading volume has climbed from $700 million to as high as $2.4 billion. The views and opinions expressed here are solely those of the author and do not necessarily reflect the views of Cointelegraph.com. Every investment and trading move involves risk. You should conduct your own research when making a decision. A recent survey from Bitcoin Markets exchange has revealed that while Australian investors are still conservative in their choice of investment assets, the embrace of cryptocurrencies like Bitcoin, BTC, and Ethereum, ETH, is largely more popular than precious metals such as gold. According to the survey report, about 63% of the respondents said they invest in stocks or shares, while 29% invested their capital in investment properties. Highlighting the number who pumped funds into the duo of Bitcoin and gold, 23% of the respondents are well invested in the former, as compared to the 20% for the latter. The report highlighted the positive disposition of Australians with respect to the spread of their investment portfolio. This spread of investments across a wide range of asset classes consolidates the view that a large majority of investors are not using cryptocurrency as a get-rich-quick investment. Instead, it is as part of a carefully considered asset allocation strategy for an overall wealth portfolio. The report reads, as a major emphasis, the survey report highlighted the fundamental reasons why Aussies are investing in the digital asset industry. In an ecosystem where the majority are investing their capital based on the meme craze to double their income within a short period of time, as many as 70% confirmed that they are investing in crypto to build their wealth, with another 34% investing as a means to boost their retirement plans. Just 1 in 5 investors confirmed their biggest driver was their fear of missing out on this emerging asset class. There is also a smaller proportion of investors who rely on cryptocurrency investing for shorter or medium-term goals. These include holidays, 6%, and paying down debt, 12%. The smallest portion wants to use their investment to start a business, 4%. The report highlights Australia has been a hotbed of cryptocurrency-related activities, and investors' readiness is often exploited by malicious actors who present fraudulent investment schemes to unsuspecting investors. The country's regulators reported that residents lost over $70 million to scams in the year's first half. Chinese traders appear to be flocking to derivatives dYdX amid concerns over a renewed crypto crackdown in China. Decentralized derivatives exchange dYdX has seen a surge in trade activity as concerns surrounding a renewed Chinese crypto crackdown have circulated this year, with the DEX now processing more volume than Coinbase for the first time. According to CoinGecko, dYdX has facilitated more than $4.3 billion worth of trades in the past 24 hours. Beating out Coinbase $3.7 billion in volume by nearly 15%. dYdX founder and former Coinbase employee Antonio Giuliano celebrated the milestone in a September 27 tweet. 5 years ago I left at Coinbase and eventually founded dYdX today, for the first time. At dYdX protocol is doing more trade volume than Coinbase. Pic.twitter.com/Gzokov29. The surging growth for dYdX comes amid renewed concerns regarding the threat heavy-handed Chinese regulation could pose for the global crypto sector. On September 24, Beijing intensified its crackdown on crypto assets by banning all digital currency transactions. The People's Bank of China said in a statement that cryptocurrencies are not legal and should not and cannot be used as currency in the market. As reported by Cointelegraph, China has banned or caused FUD in the crypto space on 19 separate occasions since 2009. In a September 26 tweet, China-based crypto reporter Colin Wu noted a recent surge in demand for decentralized exchanges and other DeFi products among Chinese users, stating, in late June, one of China's largest crypto exchanges, Huobi, banned domestic derivatives trading. The following month, Huobi closed its China-based exchange operator as pressure from Beijing escalated before halting all new registrations for Chinese users on September 24. Over the past 6 months, dYdX has grown by 19,700% in terms of daily exchange trade volumes, which were just $22 million at the end of April according to CoinGecko. Coinbase comparatively has remained relatively flat in terms of exchange volume growth over the same period with around 6%. Coinbase volumes did surge to an all-time high of $19 billion in late May when crypto markets were also at their peak. Wu also noted that other derivatives exchanges were seeing an uptick in Chinese registrations, stating FTX registrations may also be on the rise. The Chinese community is sharing its registration link. dYdX offers a range of perpetual contracts on various crypto assets, allowing traders to hold leveraged positions without using contracts with a fixed expiration date. Related, dYdX exchange releases governance token, making its airdrop worth up to $100,000. L2Beat, which tracks data for Layer 2 protocols, is reporting that dYdX is currently second in terms of total market share with around 19% and $478 million in total value locked, an increase of 20% over the past 7 days. In September 2019, Coinbase invested 1 million USDC stablecoins into dYdX in what it called a USDC bootstrap fund. In June this year, dYdX raised $65 million in a Series C funding round led by venture fund Paradigm. Solana, SOL, reached a $216 all-time high on September 9 after rallying 508% since August. The bull run caused some analysts to project a $500 target, which would translate to a $150 billion market capitalization. It is worth noting that during Sol's rally, the Ethereum network's average transaction fee had surpassed $40. Surging interest in the NFT market accelerated investors' transition to Solana, which was boosted by FTX's NFT marketplace launch on September 6. Continue reading on Cointelegraph. Hit the like button and subscribe to the channel.